All right, guys, the next step is going to be to tie out the payroll transactions. We entered those in the last step, and I just kind of booked them to payroll expenses. And so we want to book those out just a little bit better. So we're going to go to reports off to the side, standard reports. We're going to run a profit and loss. I did all those transactions dated in 2025, so we're in that payroll period or that pay period. So you can see we have $17,243.41 in payroll expenses. So I actually don't like seeing anything in this payroll expenses category. We made sub accounts for officer salary, salary and wages, and payroll taxes. And so each of the amounts here should be included in one of those buckets. So this should be zero when we're done. So if we click on this, we'll get like the detail that makes up that 17,000. You can see there's two transactions, and this is honestly pretty close to how this will look. So here's the fictitious payroll report I made that ties out to the bank statement. Most payroll reports don't look exactly like this, but they'll look something like this. And the information you're looking for is here's your employees, here's their net pay, here's total payroll amount, total payroll taxes withheld from the employees, and then total employer taxes. So I'm going to show you guys how to break this out. So if we just add these up real quick, the net pay amount 24152, and you don't have to do this, I'm just showing you. 11,76659. So now when we go back to QuickBooks, you can see that this amount matches this transaction. And this is actually how this is going to look when you go to do this, even with, ADP or Gusto or whoever's payroll reports. So we're going to click on that. And this is going to get broken down into two buckets. You're going to have officer compensation, and you're going to have salary and wages. And I think those are good to break out. If you're not incorporated, you're not going to probably have officer comp. You're not going to put yourself on payroll if you're just a sole prop. Just the love of the game real quick. The reason it's just helpful to break those out is just from a tax perspective. If you look at an 1120S, this is the tax return. You'd be filing as an S corporation. You can see that there's this line, compensation of officers, and then salary and wages, which is separate. So it's just helpful if those are broken out. Plus, then you can know how much you've paid yourself versus what you've actually paid other people anyway. So it's good. So we're going to break that out into two categories. If we look at our payroll report, let's just assume Alex Johnson here, who's, again, obviously this is a fake person. Let's just say he's our officer. So out of the total transaction, $2,415.20. So that is going to be officer comp. So we're going to do officer salary. And if you're doing bookkeeping for your own business, you are probably the officer. I'm just going to move this off screen so I can see the amount. $2,415.20. And then the rest of this should go to salary and wages. And again, the logic behind that being you are the officer, so your pay goes to officer comp, and then all these other people are your employees, and so it goes to salary and wages. So we could just, that's the total amount. It's actually good to keep this tallied somewhere, so at the end of the transaction, you can make sure you didn't change it at all. What you can do in this field over here, if you want, is you could just do each person's pay, and after you type in the number, you can just do a plus and then just put the next person's. Our total amount is 11,76659, which was the amount we had. So this didn't change. Because if you're not careful and you change this, what's going to happen is you're going to change the total amount of the transaction, and then your bank reconciliation is going to be off. So you do want to make sure that this amount is the same as what it started at. So okay, we got that split into officer salary and wages. So we're good with this transaction. Okay, and then we have this other transaction. This one's a little bit more confusing because this is just all the taxes. So this is actually going to get booked into three camps. This is going to get booked into officer salary. This is going to get booked into salary and wages. And this is going to get booked into payroll taxes. So the first one, officer salary, what we want to look at is our officer here, Alex Johnson. He had, these taxes withheld from his pay. So if we add those up, 380 plus 198.40 plus 46.40 plus 160, that amount is officer salary. I'm just going to move this off screen so I can see it. 784. And then basically those same numbers, but for everybody else, you can add them up individually, or on this particular payroll report, we can see the total employee taxes withheld right here. So what we could do is 784.80, so that's the officers, and then just kind of subtract out everybody else's. So that'll give us everybody else's. So all these numbers put together will equal this. So that's going to be our salary and wages. And the logic behind this, like you might be thinking like, oh, these are taxes. Why are they going as officers' compensation, or why are they going as salary and wages? Is because to the business, this is still just salary and wages. Like if I paid you $100 and then withheld 10 and gave it to the government because the government mandated that I do so, this didn't cost me an extra $10. I paid you your 100. So the government taking the 10 from you is between you and the government. It has nothing to do with me. So all these taxes are just the government taking your employees' money. So that's why they still get put in those buckets. The fact that you're just taking it and putting it where it needs to go doesn't change the classification. You paid them their amount. So that's the logic behind that. And then we can see total employer taxes. So this is additional taxes that I do have to pay. So that goes into the payroll tax bucket. And again, that's just on here. 1643.41. And most payroll reports will actually have this somewhere for you. Like it will say like, hey, here's total employer taxes. This is a little bit, this is a little bit confusing. I get it, but so between our total employer taxes and our total employee taxes, if we add those up, it should give us this amount. Again, we're just trying to make sure we're not changing this transaction. You don't have to do that. I just always do it just to double check, just to make sure I'm not screwing up my books. And then save and close. So now when I go back to my profit and loss, I can see there's nothing in this general payroll expenses category. I've got my officer salary, my payroll taxes, and my salary and wages. And also, you'll see that even though it might not have made sense while I was doing it, my officer salary, $3,200. Alex Johnson, his gross pay before taxes was $3,200. And then if you add up everybody else's here, 2,750 plus 4,100 plus 1,950 plus 3,600 equals 12,400. So that's what we got here. And then our payroll taxes for the employer equals what we have here. So all our numbers tie out, they're looking good. And that'll do it for tying out these payroll transactions.